good morning. Thanks for tuning in. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. Good morning, viewers. And it's a rocking start to Tuesday. We're up over 100 points on Nifty. So the trend seems to be extremely strong. It's the put writers which have become extremely aggressive. The Nifty up 1%, the Nifty Bank up over 1.2%. So there is traction that's happening on the markets. Pull up the Nifty futures and the Bank Nifty futures to get an indication that the Nifty futures, the premium has widened to 15 points. 12,160 is where the futures are trading. Open interest build up of 2%. For the Bank Nifty, I believe that the open interest build up will probably be even higher, 30% open interest build up. The index up 1.2%. So there is enough strength that's happening on the indices. Let's take a look at where positions are being built. Again, put writers will be aggressive at 12,000, 12,100, and you can clearly see on this screen, even at the 12,100, some bit of call writers are active, even at 12,200. So if the market continues to do what it is, call writers at 12,100 and 12,200 will have to force to shed positions today. That is the case. Put writers active, the PCR ratio probably will be much higher today at 12,100. Already some bit of unwinding on the call side happening. If the market continues this trend, there will be more call writers that will get trapped, and they will have to cut positions, and the Nifty will move in even higher. But underneath the stock specific, anything you're spotting?
Yep, there are a lot of stocks in focus, and we're getting positive cues this morning. And there was a significant build up just in for start of trading, at least in Bank Nifty futures. Open interest up about 30%. But in terms of individual stock futures, let's look at the gainers as well as losers in terms of open interest. So there you go. OI build up seen for stocks like Bharat Industries, which is up also 2%. So long position seen there. You've also got stocks like Oil India, India Bulls Housing, Tata Global. Tata Chemicals is, by the way, trading at its 52-week high. So there's both price as well as OI actions seen. Though these are the OI gainers. Let's also look at the open interest losers. Then you've got a lot of stocks where unwinding is coming by. So your biggie Reliance Industries, Bajaj Auto, Maruti Suzuki. No major unwinding seen. It's just very, very marginal right now. So you could see some bit of unwinding maybe in these stock futures coming by. But overall, it's turning out to be a good day. Even the broader markets have scaled higher. So the gains are coming across the board today. Mid cap as well as small cap indices are also up and about, and the market breadth is looking very, very positive. Reliance contributing 22 points to Nifty's gain, and banking stocks are in focus. Both ICICI Bank and HDFC Bank also contributing to these gains. All right, before we get to get our guest on the show, here's a reminder for you all. If you have any queries in the futures and options market, and in fact, you can call us now on 022-4540-4141, or you can write to us on our social media platforms, Twitter, YouTube with AskBQ hashtag.
Okay, let's welcome our guest on the show today. Joining us are Rajeev Palviya of Axis Securities and Nirav Chheda of Nirmal Securities. Many thanks to both of my guests for joining me today. Let's start with you. Rajesh. What are the Nifty strategies that you have for us today, or even if it could be a Bank Nifty strategy?
Yeah, good morning, Darshan. Yeah, if you look at today's move of the Nifty, a lot of call writers which were there at around 12,100 seems to be, unwinding their position, which is, clearly giving us, signal that, Nifty may further scale up from the current level also. Though we have already, gained around 122 point in the first half of the trade. So my belief is that, if any minor corrective action comes during the day, is a buying opportunity in the indices. So 12,100 is a, very important level as of now for the Nifty. If he continues to hold this level, then my belief is that we'll cross the level of 12,250, even 12,300 in the coming trading session. So for the day, my strategy would be to buy around 12,125 if it comes near to that level with stop loss of 12,080, and I'm expecting that during the day we can reach to the level of 12,190 to 12,220. This could be the possible target we can see Nifty in today's trade. Even on the Bank Nifty front, now we are trading about 31,500 level, which is very important for the today's trade. If he continues to hold about 31,500, even 31,450 level, then we might see further more short covering action to initiate in the Bank Nifty, and Bank Nifty can scale up towards 31,750 to 31,800 in today's trade as well as in the tomorrow. So as of now, 31,450 is the important level to watch for during the day. If any dips comes near to that level, is a buying opportunity for upside target of 31,750.
Okay, so those are the key levels to be monitored on these indices. Remember, for Nifty Bank, we'll also watch out for 50 DMA on the upside, which is at 31,540 thereabouts. Hi, Nirav. Good morning. It's been a great start. How do you approach the markets now at current levels? Do you take any fresh positions, or you would wait by for some bit of dip?
Yeah. Good morning, Navneet, Darshan, and Rajesh sir. See, on the index, definitely there were signs that index was going to rise. The first sign was, during the budget time, the open interest was only 1 crore, and even now, when the average open interest is around 2 crore 20 lakh shares, in the last 12 months. In the last 3 months, consistently we are seeing open interest in Nifty futures being very less, only about 1 crore 40 odd lakh shares on an average for the last 3 months. That means there are not many aggressive positions in Nifty, and that is why we are seeing these V-shaped recoveries, because incremental selling is something which is not coming in Nifty, and that is a very good sign for the markets. The PCR and the VIX are at comfortable levels, so I believe Nifty and Bank Nifty should move up. At this point of time, Nifty is already up about 120 odd points, so the trade for me should be around the Bank Nifty. I believe Bank Nifty has witnessed a bullish engulf on the weekly charts, which is very positive, and we have also opened above the previous close as well. So very likely Bank Nifty is going to make a move toward the 32,000 odd levels. I believe one should be buying this stock, buying this index at current levels with a stop loss of 31,250, and a possible target can be around 31,800, 31,850. Even for Nifty, I believe Nifty can stretch towards the 12,300 odd levels from current levels.
Okay, the index strategy is coming in. Let's also talk about some stock-specific strategies. Nirav, you only go first. Some of the stocks that you feel that should be bought at these levels.
Yep. See, after a long consolidation, there was about 2-year consolidation for Adani Enterprise, after which it finally broke out above that 180 level, which was holding on as a strong resistance on the upside. After that, even though Nifty's come down, this stock hasn't really come down. It has continued to make a higher top, higher bottom formation. The rollovers became increasingly positive. Incremental open interest was built up in the stock, and it continues to be built up. So I believe this stock now at all-time highs very likely to move up further up to the 270 to 80 odd levels. So buying this stock at current levels with a stop loss of 237 on the futures makes sense for the target of around 265 to 70. The second stock is a buy call on M&M Finance. See, this stock was trading in a lower top, lower bottom formation for quite some time. Also, it stretched from about 400 to 300 odd levels, where the volumes really rose up. So the volumes at lower levels really picked up when the stock went down. That means some accumulation happened. Finally, this stock has broken out above a very important resistance, a downward sloping resistance of around 390. I believe this stock is headed upwards. This can be bought with a stop loss of 390 on the futures. The stock can come up towards the 425, 430 odd levels.
Okay, so those are two long calls coming in from Nirav. I just want to pull up Indiabulls Housing Finance, that's up about 7%. You've also got L&T Finance, which has gained nearly 4 to 5% in trade. And these are your top F&O gainers right now, right? Before we get some technical views on this stock, Rajesh, you also take us through your individual stock bets. I think Adani Enterprises features in your list too.
Yeah, the Adani Enterprises is a buy from my side also, as the Nirav already stated about the aesthetics of that stock. And during this series also, we have seen almost 8% open interest has been added in the Adani Enterprises, and with the price action of 5% gain we have seen in the FAB series itself. and the stock managed to give breakout on weekly as well as on the daily chart, which is giving us believe that Adani Enterprises can move towards 255. So my target is 255 in the near term basis for Adani Enterprise. One can place a stop loss of 241. The another stock is from the metal pack, and the stock is Jindal Steel and Power. If you look at the overall setup of Jindal Steel Power, stock is trading above all its important moving average. Stock has gained around 8% kind of open interest in FAB series itself, and with the price action of 10%, so which is a clear cut sign of long built up has been there in the Jindal Steel and Power. So I would suggest to buy 200 strike price call option with a trading at around 9 rupees 40 paisa with stop loss of 4 rupees, and I am expecting that target of 15 to 17 in the coming trading session for Jindal Steel 200 call option. If anyone wants to buy direct future, then he can place a stop loss of 196 for upside target of 210 and 215 for Jindal Steel and Power. The third stock is from the automobile pack, which is Escort. If we look at the overall setup, stock managed to give breakout on the weekly chart. It has shown a V-shaped recovery on the weekly chart, and it is one of the outperformer in the automobile pack. And looking at the today's edition, almost 8% open interest has been seen in the Escort. So looking at the setup, I feel that Escort can really further from the current level, and I am expecting target of around 900 to 910 in the coming trading session. So one can buy Escort with stop loss of 865.
Okay, just pull up Biocon, and there is a sudden bout of selling that's come in. It was trading with a positive bias, now just corrected over 2% that's come in. So there is negative traction that's coming in on Biocon. Rajesh, any view on Biocon?
So if you look at the setup, stock is witnessing supply pressure from its previous swing high of around 310, which is steep resistance for the stock. So I feel if it's not crosses about 310, some sort of profit booking we can see during the day, and it can come down to the level of 300, even 295. This is the important level for the Biocon in the corrective action. But overall setup is positive for the Biocon. So if dips comes near to 295 is a buying opportunity. As of now, 310 is a steep resistance for the stock.
Okay, and the stock's been quite active in the recent past, maybe some profit booking kicking in after the recent surge that we've seen for Biocon. The other one we were highlighting was Indiabulls Housing Finance. It's a high beta counter, which is up about 7%, and L&T Finance Holdings also surging in trade. In fact, 10% higher in terms of OI build-up. Futures are trading at a discount. Nirav, I know it can be a risky bet when it comes to stocks like Indiabulls, but would you take a bet here?
Yeah. See, Indiabulls definitely is in a upward trend. The near-term trend is up, but the long-term trend is still down. It has witnessed a breakout technically above the 335 odd levels, and it is sustaining above the same. Until it is sustaining above the same, one can buy the stock with this strict stop loss of 335. If it goes below that, just exit the stock because it is very volatile, as you said. It can come up toward the 400 odd levels, which is where I believe one should be booking profits and not holding on to the stock.
I think some of the metal stocks have started to move. That is JSW, JSPL, Tata Steel. Nirav, anything on the metal side? I believe you spoke of one of the metal stocks, but what's your sense on which is the best pick here?
See, definitely, as Rajesh sir said, Jindal Steel. There are two reasons for Jindal Steel. See, first of all, in the December series, the rollovers were 25 to 30% lower. That means a lot of shorts had covered the position, and the stock was around the 150 odd levels. Also, that is when new long positions were built in into this counter. It did not really move much in the December series, but at the end it did. During the Jan series, a lot of price movement was seen. The rollovers continued to be low, and this stock witnessed a breakout above a long-term trend line around the 150 levels as well. So there are two things because of which Jindal Steel has moved up. it is one of the few stocks in the metal space which I believe is likely to move up further for the next 20, for another 20% odd. So definitely I'll be buying Jindal Steel. It has a resistance around the 200 odd level. So it had crossed this in intraday. I think it should be crossing it again. The 190 levels is a good support for this stock. So, definitely Jindal Steel is one. Secondly, if I want to take another pick, then definitely it should be JSW Steel. Look at the movement. There is a price volume breakout for this stock as well. So it has just moved out above important resistance of around 282. So until and unless 282 is not crossed below, one can be buying this stock with a target of around 300. Keep a stop loss of around 282.
Okay, so metal stocks shining in trade. Remember, they were weak in yesterday's session due to coronavirus outbreak, but strong rebound seen today. In fact, Tata Steel too, which was down about 5 to 6% reacting to its numbers, has seen a bit of bounce back in today's session. Nirav, we'll thank you on that note, and thank you for joining us today once again on the F&O Show. But moving on, Apollo Hospitals, I'm just going to start taking certain queries as well. So one of our viewer on YouTube wants a view on Apollo Hospitals at current levels. Rajesh, how are the charts of Apollo Hospital looking like? Would you advise taking any fresh position here?
I think if he has already bought the stock, he should continue to hold the stock because it's in consolidation mode, and if you look at the overall setup, stock is in positive territory. So my belief is that once the stock manages to cross above 1700 level, then it will continue its uptrend, and then higher side target we can witness towards 1740 to 1760 in the near term to short term basis. So as of now, he should hold the position, and at the current level he should keep stop loss of 1645 for its for long position.
Okay, that's the view that's coming in on Apollo Hospitals. Apart from it, one other stock that we want to speak about, and that is Nalco. Nalco is down almost 5% in trade today. Obviously, weak set of numbers at 40 rupees currently. Rajesh, any view on Nalco?
So if you look at the near-term trend, the stock witnessed a supply pressure from its down-sloping trend line from on the daily chart, and which is acting as a stiff resistance around 45 level. So till the stock not crosses above that level, there would be supply on the higher side. The trend is on the negative side. If you look at the overall setup, stock is in weak territory. So my belief is that stock can further go down towards 41.50. That this is the next support area on the near-term basis, because it's multiple support area. So if anyone is short in the stock, one should unwind their position at around 41.50 level.
Okay, that's Nalco for you, reacting to its earnings. One more query coming in on Bank of Baroda. So that's coming in from Anu on YouTube, and she wants a view here as well. Rajesh, I think it's not done anything, Bank of Baroda. It's been trading below all its key simple moving averages at least. Would you advise taking any bet here? Has it bottomed out? Do you see any upside for the stock?
I would avoid this stock because the overall trend is negative. Stock is witnessing supply continuously from the 92-94 zone is the steep resistance area for the stock, and again stock is witnessing supply from those level. So till the stock not crosses above 95 level on the weekly closing basis, it's a avoid for me. As of now, on the lower side, 86 is the important support area. So it's range bound stock as of now. 86 to 95, this could be the possible range one should play in the Bank of Baroda. Once we get the decisive breakout over 95, then we can see some significant up move in the Bank of Baroda towards 102, 104 level.
Okay, that's Bank of Baroda. Just going to take one last query in the show. Remember how Colgate bounced back from its 200-day moving average? They were selling seen post the numbers came about, but there was some recovery, at least post the budget. All these MNCs were moving higher. Rajesh, one of our viewer wants to know, can Colgate be a good shorting candidate at current levels? What would you advise?
Yeah, one can go short because in recent past we have seen some sort of recovery, but still stock not managed to cross its important level of 1400, and again we have seen supply from those level. Though in the last few trading sessions we have seen a lot of short positions were there in the Colgate. So yes, stock can further go down from the current level towards 1320 and 1310. This could be the possible target we can see in the near term in the Colgate. So one can place a stop loss of 1395 to go short in the stock.
Okay, that's the view that's coming in on Colgate. Many thanks, Rajesh, for joining us on the show today and giving us all your perspective. But for more updates on the F&O space, you can check our website, BloombergQuint.com, and all the information will be there.
And with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. Stay tuned to Bloomberg Quint for more news and updates.